Simply and self-evidently, the most important thing that advisors can do in the approach to the end of the tax year is to communicate with their clients in enough time for any action that might be possible to be explained and considered, and in the way that most suits the client. When you communicate and how you communicate is so important. Relevant proactivity carried out appropriately and done well is so valuable and valued. By this, I mean saw this and thought of you communication founded on a real understanding of your client's position and what's important to them. It's this kind of communication that is the starting point for the potential delivery of advice alpha. In other words, leaving the client better off for your advice than without it. In my opinion, the delivery of advice alpha depends on a combination of contextual knowledge and specific know-how. Let me explain. Contextual knowledge is the expertise of a great advisor that advisor has of the economic and taxation context in which financial planning, and in this case, tax year-end planning, takes place. Specific know-how is the knowledge that the advisor has of the client's particular financial position and what's important to them, especially how important tax efficiency is to them. It's also the know-how of how, on their own or working with the client's other professional advisors, to implement any tax saving strategies that are beneficial to the client and that the client wishes to proceed with. And this point can't be overstated. There may well be tax saving to be had, but a client may not see the effort or perceived, and that's important, perceived difficulty as worth the tax that's saved. The effective application of a simple cost-benefit analysis to determine whether action that is theoretically fiscally beneficial is actually worth taking. Different clients will have different views over what may be essentially very similar actions. One size definitely doesn't fit all when it comes to tax year-end planning. How you approach your tax year-end initiatives will depend on a number of factors, but it's essential to take in enough time and not to leave it until the last minute. The fact that your client may have left thinking about taxation and tax saving until the last minute may not surprise you, but you should definitely not follow suit. Now, it may well be the case that the majority, if not all of your clients, have fully considered, with your help, all of their tax planning options throughout the year. But often through no fault of yours, some will not have been as diligent as they should have been. I believe that it's the responsibility of a good, holistic financial planner to at least make their clients aware of the opportunities available to save tax. Offering this service with a clear identity and in a structured way, for example, through offering a tax year-end health check, may help with engagement. In fact, I'm pretty sure it would. Many of the last-minute actions that will be on a typical tax year-end checklist will revolve around reliefs and exemptions that, number one, will be lost if they're not used, and number two, can be simply and effectively implemented at the last minute, so to speak. So, in closing, on this, I think, very timely subject of tax year-end planning, remember that it all starts with a conversation.